Hello everyone, how's it going? In this video, we're going to talk about sundial growers trading under the ticker symbol SNDL. So we're going to take a look at its price actions, the outlook, and the recommendation. Of course, a brief disclaimer, these videos are for entertainment purposes only. They shouldn't be taken as the investment advice, at least your only one, before making a decision. So sundial grower positions itself in basically the cutting edge of regulations with what it wants to do and what it wants to sell. Okay, not every single market is open to it, but they have seen back in the days like a trend where there would be more and more jurisdictions open to free up this kind of demand. So the demand we know is there, but now is a question of occupying the market share for the supply side. And this is where SNDL comes into play. They have been expecting regulatory changes to increase their customer base over time, and they have made acquisitions in that sense. Of course, I have to be honest, a stock like SNDL, it also relies heavily on what is the current market mood or what is the flavor of the month. It lasts more than a month, of course, but I would say that they tend to last for a few years before the real results have to kick in for the investors to keep the investors interested in what the company does. And suffice to say that so far, this is not something that that the company excels at, or in fact, this is not what the sector excels at. They have been underperforming in terms of the financial ratios and statistics, and it kind of reminds me a little bit of fintech in roughly the same era, maybe a little bit later as well. So a lot of these companies, they may intrigue the investors in the first place. A lot of people think that they're gonna have a moonshot with this, but it doesn't mean that they're gonna happen for real. And in the meantime, there might be another flavor of the month coming up, and then they're gonna go from, let's say SNDL to Tesla or to NIO or to Palantir. So this is why I would say that, this remains one of the bigger challenges with SNDL. They have to demonstrate to the market that they now have the capacity to make, I was gonna say to make a living, but to basically sustain its own operations. It cannot at the current rate. So if we look at the price actions, it's been down over the last 30 days by 22%. It's down by 12% in the past 5 days, and it's been down by 45% in the last 6 months. So what we see is a slowdown of the current sell-off. It's sitting around right above $2 by the time this video has been recorded, and the $2 also happens to be a very significant support level. The resistance for the foreseeable future is between $3 and $3.50. The trend is actually a ranging kind of situation. So the stock has been ranging between $2 and $3.50 with an overall downward tendency. Basically what I've explained before. This sector itself is a novelty in the mind of people, and not a lot of people are set to stay in the sector for the long term, and they still are not. So it's been overall flatline since 2020, which suggests that most of the smart money, the investors, they have left the company and went to other sectors. So yes, what I'm saying is they haven't just left SNDL. They probably left the entire sector altogether. Currently, there's about 0.2% of institutional shareholders in the float, which kind of speaks volume about how much trust is in SNDL in terms of long-term investment. Because the existence of institutional owners means that they tend to stay in for the long run. They think that there's going to be some actual potentials in this company to grow significantly larger from where it is right now. And the fact that there's only 0.2% of them doesn't mean that this company is finished. It just means that, it's mostly a trading play and not really an investment play for the time being, at least. And yeah, the final thing is that can explain why, like institutional shareholders have left, and also like the company's price has been pretty much like flatline, if not going downward, slowly going downward, is because the cool factor has faded away for the most part, or like the intrigue is no more. So this is my biggest takeaway from like the chart and what the company's own communications have suggested for me. Now, my recommendation for Sndl is that if you want to trade the stock, is a good opportunity to buy now, because like I said before, support level is between $2 to $3.50, which is an interesting profit margin. But if you're looking for investment opportunities, then I would say to not only look elsewhere, but to look outside of this sector. I believe that at the moment, this sector is a little bit bloated. We need to see where things we're going to land. We have some regulatory uncertainties. And by regulatory uncertainties, I don't mean like where the trend is heading towards. I really mean like whether the government will start producing themselves, if they're going to have like a quasi-monopoly in this kind of sector. Because here's the thing, antitrust, I think that it applies for traditional sectors. In things that are politically sensitive, like Sndl, my feeling is they're not going to be around and be like, oh, we got to let the competition in. A lot of the governments may just sell this, themselves. Okay, that's my feeling. And this is why if you invest in a lot of companies like Sndl, not just limited to it, but like Sndl, there's a real chance that at some point we're going to hear from the government that, oh, you know what, this is just like healthcare, okay? The suppliers are going to be controlled by the government with a set percentage of the margins. So the only thing that comes to my mind regarding, the price action or even like the profitability potentials for Sndl would be the sale of alcohol beverages. The margins are actually pretty transparent, not only because there's competition, but also because they're regulated. So, like what's going to be the potential profit that we can get out of companies like Sndl is for now unknown, and they have been protected by this unknown for some time. In other words, because you don't know where is the sky, because nobody has told you that maybe the sky is just, 10 meters above your head, well, you can imagine that the sky is very far above, right? So this is like the factor that has protected somewhat shares like Sndl's in the past. My feeling is, if really, the rubber meets the road, we're going to have a different outlook. Especially if we look at like the markets where it has been fully legalized. Well, it doesn't mean that just anyone can pitch in and make a killing. A lot of people can't. And because they're going to be met with heavy regulations, and just, different but heavy regulations nonetheless. So I would say that if you're looking for swing trades, go ahead now. If you're looking for like investing, then maybe look for other opportunities. So the maximum exposure I would recommend would be around 1% of your portfolio.